Okay, folks, welcome to Sunday Night Futures Live. We're getting started early tonight because I had a lot of requests to get on air. I posted a lot over the weekend on stock, Twitter, a lot of retweets and whatnot. So a lot of back and forth tweets, a lot of back and forth emails, a lot of back and forth texts, messages, DMs, etc. So I said, let's just do this. So what I'm going to do first, I'm going to try to flip the switch here a little bit. First, we're going to go over what we're going to talk about this evening. But for those folks that plan on checking in until 6 p.m., I'm not going to go over the futures till then, obviously, because they're not open. But as soon as 6 p.m. hits, we will be heading on over to check out the futures action. And in the meantime, what I'd like to do is just talk a bit about the stock chart requests that we have coming through, get them out of the way. That way we could talk a lot about questions that you might have, questions about what I'm going to throw out there. This show is going to be a bit different. I'm probably going to repeat this again at around 6 p.m. when everybody starts loading up in here. Is that it's not going to be me talking about the doom and gloom. For the past year and a half, I've been talking about beware the yield curve, beware of all the events that are out there. We just don't know what the pin is going to be that pricks this bubble. So I spent a lot of time over the weekend taking a look at influencers on Twitter, X, and everybody's doom and gloom. Everybody's doom and gloom. Why? Why are you doom and gloom? How did you not see this coming? You should be saying right now, okay, you should be now off of margin. You should now have a stockpile of cash. And you should be now looking at all the indicators that are being put out there as, oh my God, the sky is falling. You should be looking at them and saying, my God, what an opportunity I have here for a counter trend rally. Now, by no stretch of the imagination do I think that we have seen the lows yet. But to believe that this type of selling with this type of ferocity can continue for another 2 weeks, a week, is highly improbable. So before you go dipping your toe into the water, you need to consult your financial advisor. This is no time to be listening to somebody on YouTube who does not understand your situation. I'm talking to people that are 18 to people that are 60 or older, completely different time horizons for their investments. So take what I say with a grain of salt, understand your goals, and please, if you're going to leg into this market, do so incrementally and understand where your support levels are. If you do not, then you are buying. Yes, you're buying the dip, but you are buying on hope. We do not buy on hope. We want to buy when we know there's blood in the streets and that we are at historical support levels. So we know that we're buying at a level where there's a high probability of buyers of like mind stepping in to help support the market. So with that, talking about support levels, I put together an infographic yesterday. It's linked below on YouTube, linked above on my link tree on Twitter. Head on over. I have all the support levels you should be looking at if you're trading the triple Qs. This is where the Fibonacci retracements are, prior support levels are, and it's free. I'm giving it away free. Just head on over. I spent about 3 hours putting this together yesterday morning. Take advantage of it. Understand, this is your roadmap. If you are buying before one of these support levels, the triple Qs, you're out of your mind. You're crazy. Don't do it. Wait for these support levels to get tested. And there's a blurb next to each one of these support levels letting you know the significance of that support level and how institutions may view that support level, because all support levels are not viewed equally. A 10% support level, 20%, 25. That becomes a little bit interesting. 38% Fibonacci retracement levels. Then you start talking about real serious support levels where you know the computers are programmed to step in and to begin the buying. So head on over, use the link below on YouTube, link above on Twitter. It's free. Take advantage of it. Use it in good health. Okay. And for those that are already in the forum, I've already posted it. I think I posted it. Did I post it yesterday? I could have sworn I posted it yesterday. Here it is. I was looking for an icon. Here it is right here. So if you're already a part of our community, it's already posted here for you. And for those members or folks that are not part of our community, head on over. We hate spam too. You're not going to be spammed if you give your email address. Trust me. And I will pop the link into the chat box. And there you go. Yoga Mac, hey. What did he do now? Corey, welcome. Mr. Tim, welcome. George from Quebec, welcome, sir. All right. So let's do some chart requests. We have about 18 minutes until the markets open up here, the futures markets, and we're going to go over some symbols. So let's get to it, and we will be live when the futures action opens up. All right, so we have Sean with BAC. Cal-Maine Foods. I used to own that. Sold that way too soon. Trend. And Soundhound. Great stock, Soundhound. Bros for Talent. Okay. Talent, I always have time for you, my friend. Always. Okay. So let's get to it. Let's begin by taking a look at these charts. And we're going to be using our friends over at TrendSpider. So, folks, if you're not currently a member of their service, I believe in it so much, I give it away free to our silver and gold level members. In fact, there I am on their website. So take advantage of their tools. I'm going to be going over one of their tools in a little while where you would have seen a spike out by insider selling that have ownership levels of 10% or greater. That functionality is on TrendSpider. So great fundamental charts, analytical charts, back testing, AI models, et cetera, et cetera. There's so much stuff here. It's ridiculous. So please head on over. Take advantage of my 35% discount code off of TrendSpider. They sponsor the show. Automated technical analysis, meaning automated trend lines. I will show that to you this evening and how that works. So let's get to it. Enough of looking at this. Let's talk stocks. Okay. And if I didn't say it, at a bare minimum, 35% discount. Use the link below on YouTube, link above on Twitter. Let's talk BAC. Okay, so BAC, we're going to begin with monthly charts, weekly charts. And all right, so the market sent us signals here. Here. Double top. Here. Confirmation breakdown. The automated trend lines would have told you that as well. I did not draw these. They draw themselves. So what they're telling you now is that on BAC, the path of least resistance is to the downside. The minute we close below this line in yellow, that was it. Actually, the line in green, because it's a 45-degree neckline. I did a yellow neckline horizontal. Actually, the algorithm's right here. The minute it closed down below this line in green at around 43.47, it was over. It's over. The trend had gone from up to now down. So the question is, where to from here? It's lower. That doesn't necessarily mean we're not going to get a counter trend rally on BAC. We just may. We'll take a look at the daily chart, see if we have something setting up. Now, a lot can happen between tonight and the open. So one would hope that if you're long in the market, you're very long in the market, you don't have a lot of capital on the sidelines, God forbid you're still on margin, that there are talks between the U.S. and China, U.S. and EU, that they're cutting some sort of deal. They'll float some balloon out there to get the markets excited. Would I buy that rally? No, I would not. I would not buy that rally. I would rather see a capitulation sell-off and buy at historical support levels. That's what I would rather do, because the probabilities at current are that any rally that we get is probably going to be vicious to the upside, but that ultimately it is going to fade and break lower because we have not had a washout yet. So BAC at current weekly chart, the trend is clear, it's defined, it's down. We've broken down below the lower band of the declining downtrend channel. I think we're coming down here to 31.45 per share on BAC. Let's overlay some monthly support, see if we have any. No monthly support here. Volume last week, it wasn't horrific. It was high volume, but I mean, you've had higher volume back here. So it wasn't horrific. Daily chart. So here again is your downtrend channel on Bank of America. Now, we are, quote unquote, oversold. Whatever metric you want to use, Stokes becoming oversold, probably a little bit of RSI oversold. Does that mean you buy? No. I mean, you could take a look at the Bollinger Bands. We're well below the 2 standard deviation, actually 3 standard deviation Bollinger Band in red, but that doesn't necessarily mean that we put in the bottom. What we could do here is check back to this prior support level, get rejected, and then we move lower. So any rally, I would not buy. I would rather buy an extended downward move that is deemed to be unsustainable, but it must be off of a historical support level. Here you have a descending wedge formation. There's support down at 32.54. Let's overlay that weekly support on top. Why is that not working? All right, let's go back to the weekly chart for a moment. It was 32.54. You're looking at between 31 and 32.50 per share on BAC for a nice bounce. That's where I'd be looking for. The shares closed on Friday at 34.39. So very easily achievable. I can't see how we don't get down there. I would rather buy down there than see a gap up tomorrow. I think that it's only going to fade. Traders like me are OCD. We obsessive compulsive disorder. We need to touch things. We need to touch support. We need to hit resistance. Guys like me, we're not going to buy any rally tomorrow. We're not going to do it. Simply not going to happen. It's just buying on hope, buying on ether, buying on a news event that may or may not play out and get dismissed later on in the day, later in the week. Forget about it. That's not what we're going to do. We're going to buy at support only. Now, moving on to, oh my God, Trish, how long has it been? Hope all is well with you. It's been a while. Oh my God. You've been looking at my big ugly head this entire time. Thank you for saying that. Let me share my screen. Okay, quick refresh so that I don't leave everybody guessing what I was talking about. So thank you, Trish. So BAC weekly chart, double top, confirmation breakdown below the automated trend line here in green, my horizontal one in yellow. That was it. It's all she wrote. Game over. Path of least resistance went from being up to neutral to down. We're on the other side of the mountain. Pretend that you're hiking up a mountain. That's your bull market. You're at the top. Like, oh my God, I'm exhausted. And all of a sudden, you got to start walking down the hill. That's where we are right now. We're on the opposite side of the mountain. We're looking for the support level right here between 31 and 32 bucks a share on 31 to 31.50 on BAC. Russell, welcome. Thanks, Tim. Sorry about that. Yeah, I had a lot of pressure to get going early today, so I figured, you know what? Let's just go live. We have 140 people on here right now. That's the largest audience that we've had probably since the last bear market. So that just goes to show you it was a very busy weekend this weekend. Started at the close on Friday. Everything was just blowing up. Hey, Bob, I could see the charts in my mind. Thanks for being kind. Thanks for being kind. I appreciate that. Okay, let's move on. I'm sharing my screen. Everything's up. Audio's working. Let's go on. Next stock. We'll get this one right. That was the layup. Cal-Maine Foods being up next. Cal-Maine. Let's take the automated trend lines off. Okay, so this is probably done this cycle. All right, so you've had a big bull run here on Cal-Maine. It's a very, very volatile stock. There's I'll call it a rounding top. Egg prices are coming down now. They're importing eggs from around the globe, and that's going to impact Cal-Maine Foods. So what you have is a break of trend. So whenever you see this type of stalling action, especially on a volatile stock, you got to get ready for the reversal. You get these topping tails, a failed breakout, whatnot. You got to get out because volatile stocks like this don't give you a second chance. Very thin float. And when they break, sometimes they don't give you a check back to support. They just get walloped. There's cyclical plays. This stock may not rally again for another 5-10 years. So right now, I would avoid this stock. I wouldn't short it. It's far too volatile. I could be wrong. Egg prices may bounce back. Maybe there's going to be some retaliatory tariffs because countries know we're vulnerable to egg prices right now. So I wouldn't short it. I just wouldn't buy it. There's no reason to right now. I see a lot of risk, not a lot of reward with this stock. And I happen to like the company quite a bit. I used to be an owner. Daily chart. Daily chart, it's holding up well under the withering pressure of the selling, but it doesn't make it a buy. Might we rally here with the rest of the market? Sure, no doubt about it. We have a wedge formation forming. I just don't know which direction we go. We're taking a look at the weekly chart, right? This is our macro view of Cal-Maine Foods. Is the trend up or is it down? It's clearly down. So what does that mean for any breakout on a daily chart? It's on thin ice. It's highly susceptible to a failed breakout. So why bother? Why bother? There's better fish out there to fry than hoping for an egg company to come bouncing back. Taking a look at TRIN. Thanks again, Joel. Thanks for the support. Listen on the cues. I printed it. Yeah, Tim, I hope it's valuable. And if those just joining and don't know what Tim's talking about, I prepared this infographic. That's what Canva calls it, infographic. And I listed all the support levels on the triple Qs that are on the institutional watch list. They are watching these support levels very, very closely. These are Fibonacci retracement levels and historical support levels marked by 10, 20, Fibonacci retracement levels, etc., all the way down to 50% retracement, etc. Great download. It's free. Take advantage of it. And it costs nothing. Take advantage of it right now. Link below on Twitter. Link above on my link tree on Twitter. Back to our regularly scheduled programming. Trinity Capital. Same deal here. Same deal as with Bank of America, I should say. We have a double top, lower high, and we have a confirmation breakdown. This is the first thing that we look at when we're looking at a stock to try to determine where it's going. We want to identify where it's been first, right? So we were in an uptrend. We stalled out. We were unable to break out, and the bulls just lost their power. And the bulls garnered steam. They got emboldened, and they took it down below historical support levels. So a double top isn't a double top until such time as you break down to a new lower low. That's the confirmation. That's the problem. For all we know, this could have been a double top, traded sideways, bounced off of support a few times, and then broken out. Could have been a continuation breakout. We don't know. So that's why they call this confirmation. And this broke support. And here, unlike Cal Maine, you had a check back, and then you had follow through to the downside. This stock's broken. Now, you do have, these are the automated trend lines. You do have support below, and we actually, let's get the Bollinger Bands off here. Yeah, we actually tapped that support level last week, probably Friday at $14.35 per share. Volume heavy institutional distribution. So the question becomes, is this rock solid support, or do we break lower? Daily view. Oh, we're on a daily chart. Sorry. Weekly chart. Sorry about that. We did not hit weekly support last week. That's at 1374. We hit daily support. I backed into this review backwards. I usually start weekly and I go to daily. I did not realize I was on a daily chart. So still a confirmation breakdown. Path of least resistance is to the downside. Support down at 1374. I would rather look for that support level to get tested right here between 1350 and 1375 per share for a bounce. Does that mean that we put in the all-time low? No. Anything that we do right now needs to be put in the context of a trade, right? Because when you take a look at the weekly stochastics, what these tell you are where's the momentum going? And the momentum for quite a while was to the upside. But now we are clearly putting in lower lows and lower highs. We have not begun to go below that 20 mark, double bottom out, and begin to hook up. Until we do that, you can't look at this through the context of an investment. You need to look at this through the context, the lens of a trade only, and you need to know where your resistance levels are, because when you're buying at a support level, you need to know, I got to get out. Because if you plan on holding a trade that you bought at a historical support level and you're hoping that it rallies through resistance while it's in a weekly downtrend, you're hoping when you should fear. That is not a successful strategy, especially in this type of market. In fact, it's reckless, right? So please, if you're going to trade it, fine. Sell into resistance or just before. I like to do it just before. I don't want to wait for that final penny. I want to wait just before we hit that resistance level and the floodgates of selling open up. Sell on your own terms. We already went over the daily chart here. That is Trinity. Folks, it is 6 o'clock. We're going to halt on the chart requests. We'll finish them off later. The futures markets are open. Let's begin. And for those, we have 156 people on right now. If I could ask you folks to like, subscribe, you know the deal. Please, helps me out with the YouTube algorithm. And let's check in with the futures action. Let's go to a 5-minute view. We'll begin with the E-minis. And we are gapping down here. Wow. 3.4% now on the E-minis. This is blood in the streets. This is what bottoms are made of, folks. You need this. You need this to happen. This is actually, it's actually a good thing. You're getting all of the weak hands out. Very, very volatile. We just went 0.75% in less than a minute. Let's see whether or not they take out the lows. Oh, they're going to take out the lows. They're going to do it before I get this alert set up. Yeah. Now down 4.2. Wow. This is some heavy selling. Now we're down 4.5%. Wow. This is history. We're watching history right now. Down 5% on the E-minis. Let's check in with the NASDAQ 100. That's got to be a train wreck and a half. Circuit breakers just kicked in. NQ down 5% as well. They've halted trading. The Russell 2000 down 6.5%. Federal Reserve is going to be involved here either through the plunge protection team out of Washington, or they will be floating trial balloons to try to support the market. Remember, folks, the Federal Reserve doesn't care about the stock market going up or down. It just doesn't. What it cares about is orderly markets. So this is clearly a disorderly market. And believe it or not, you're going to find this counterintuitive. But President Trump right now is as happy could be. I'm going to go to that now while we're waiting for the circuit breakers to open up again. Oh, they already started back up again. All right, so let's stick with it. Now down, we're still down 6.5%. Let's check in with the volatility index. Volatility. This is not the index. I'm sorry. This is the forward-looking contract or the front month contract, April contract. The high of the session was around 40. I mean, we're not even at the highs of the year yet. The high of the year was back. We just hit the high of the year just now. This is history. Let's check in with the US dollar. Why is this not opening up? Oh, that's right. All right, the dollar is down. Not by much. It's pretty much flat. Let's check in with oil. Oil is, oh my God, oil's down 3.66%. I want to check the news here. I want to see if there's anything new out there. I know that Vietnam and Taiwan had capitulated somewhat, and I thought that might goose this open here a little bit, but apparently not. Right now, it's all about China. It's all about the EU. Let's check in with natural gas. Natural gas, that's not bad for natural gas, down 2%. Let's just check back in with the NQ. Now down 4.87%. It's moving so fast. I'm telling you right now, if we close on a 15-minute time frame up, you're going to see a rip your face off rally in the morning. Wow. Wow. I want to calculate something on the Qs, calculate where they would be right now. 422.67. That was the close times, what are we down? Let's just say 5%. So 95% of the close of Friday. That's 401.53. 401.53. That would be where the Qs are trading right now. Okay. Let's mid caps down 5%. Oh, the buying opportunities here are ridiculous. They get us down to around on the NQ. This is the NASDAQ 100 equivalent, 16,230. I would look to be a buyer. Looks like things are calming down here a little bit. Down about 4 1/3% at current. History. Interesting times. All right, let's check in with gold, see how that's behaving. Flat. Silver, down 2%, off of its lows. Forget about live cattle. What else do we want to talk about? I think we're good. I think the equity market's where the action is. It's like watching a soap opera right now. Holy cow. Holy cow. Let's take some comments. You are welcome, Sean. Anytime, pal. Yeah, I think they're going to have to at this point. They're going to have to. You know, and that's a good segue into what I want to talk about. As we're waiting for these alerts to fire off here, folks, I have alerts set up so that if we get any significant move one way or the other, we'll check back in. All right. So right now we're kind of like in a range. So either we're going to do this, either we're going to flag out, meaning they're going to take this up a little bit, and we'll do this. They're going to bear flag us out. And they're going to take us down yet again. So we don't need to watch for this to happen. Or they're going to take us up, one of the two. So let's just wait to see what they do here. It looks like sellers are moving back in. Volume is not heavy. Volume is not heavy at all. It's just one-sided. Okay. Remember, folks, if you want the support levels on the triple Qs, link below on YouTube, linked above on Twitter. It's free. Take advantage of it, please. Every institution is watching these support levels. I built this myself yesterday. I spent a lot of time doing it. Take advantage of it. Use it as a tool. Okay. So for about a year and a half, we've been coming on here. I've been coming on here saying, beware of this chart. Beware of this chart. We entered the red zone. We got short. Currently, I'm not short. I wish I was, but we covered. We made money. That's good. But we do have a lot of bonds. I had a lot of bonds and now have a lot of cash. So we have a lot of capital to put to work here very, very soon. So we're happy about that. Do we have some longs that got hurt last week? Yes. Boeing, because of the tariff talk. Yeah, that slap by China, 34% tariffs, that slapped down Boeing. Silver, which was a go-to long for us, that got hurt. Even gold took a break last week. So, you know, we have our bond trade, which we took off the table on Friday, did very, very well last week. We're up on it. That was our largest position. Now we're sitting in cash waiting for opportunity. So this has still yet to play out, folks. The trend is still clear. It's defined. We are steepening. I did not go over yields. My guess is that they're going to break the support level. Yields are probably moving lower. Yeah. Right now, President Trump is doing the Irish jig in the White House. Sounds counterintuitive. We're going to talk about why he's doing it in a moment. And it has nothing, absolutely nothing to do with tariffs. Nothing. Volatility. So this is a monthly chart of the VIX. It closed out. This is the VIX index. Not what I just showed you. That was the front month contract. The VIX index is actually higher than the front month contract. So 45 was around where we peaked out during the dot-com bubble. The however is times have changed. Stocks have gotten a lot more volatile. So we could go up into the 80s. We were back at 65 back this past July. So we could still go up. Now, when you break out And this is why I'm talking about looking for an entry for a trade. This is a ratio chart of the VIX versus the triple Qs. Now, the VIX is clearly outperforming the triple Qs. So we know that. Any idiot could tell you that. But the question is how sustainable, and this is a 4-hour chart, how sustainable is this trend? It's highly unsustainable. On a 4-hour time frame, you have VIX at nearly a 90 handle relative to the Qs. Can it go up higher? Yes, it's the volatility index. I wouldn't be surprised if it went to 100. But we are very, very overbought here, to the point where I think that tomorrow we're probably going to, if we open up as we are right now at current or lower, we're probably going to put in a very short-term tradable bottom. So just understand where we're at on the VIX. VIX on a longer-term basis, we can go up higher. Hell, we could be up in the 60s, 70s by tomorrow morning, given this price action. If it gets worse, we could be up in the 80s easily. But that needs to be viewed through the lens of opportunity. You need to have your list out. What do you want to buy? Palantir? Hell, if you liked it 6 weeks ago, you got to love it now. And that goes for every other name out there that you've been looking at and saying, oh my God, I only wish I owned this 6 months ago. Well, you're getting it cheaper now than it was 6 months ago. So look, it's all about the contrarian mindset. It's all about understanding when to get out, when to get off the tracks, when to have your dry gunpowder, because you know the indicators have been telling you, get ready, it's coming. We just don't know when. Now the floodgates of hell have opened up, and this is your opportunity to really begin to put on some great positions. I'm looking at Rocket Labs, C3 AI. These names are going to be at dirt cheap levels soon. Heck, the triple Qs. Keep it simple. Economic data coming out this week. We don't really care what they have to say, to be honest with you. What we're looking at this week are opportunities for the Federal Reserve to float balloons. And if you want to believe that the minutes from that last Fed meeting aren't edited to suit the market of today, you got to be crazy. So there's plenty of opportunity, and not that they need a speech to do it, especially when the markets are down 5%, to come out and jawbone the market up higher. But there are plenty of opportunities this week to get this market moving up, or at least to put in a bottom. So really not much comes out until Thursday. We get CPI. That's a consumer price index. Not so coincidentally, look at all these Fed heads that are coming out this week. Very strategically placed. On Friday, we get the producer price index and more Fed heads coming out. So good stuff. Now, I have not refreshed this since the market opened. Prior to the, I'm not on May anymore. That's going to change. We were at 29%. We were at 33% probability of a cut in May as of yesterday. Today, before I went live, was at 29%. It pulled back over the weekend a little bit. Now let's see where we're at on this pullback. Refresh, go. 36.5% probability of a cut in May. And this is going to change overnight dramatically. June, this has got to be up to 100 now. That's 90. July, 99.3. Okay, so there are already expectations of a rate intervention here, or Fed intervention rising dramatically. So longer term, is the bottom in? No, it's not. We haven't achieved our objective, and that objective is a reasonably priced market. We closed out the week last week with an shoulder PE ratio, meaning a rear view mirror picture of a trailing PE multiple on the S&P 500, 31 spot 31. The mean is 17.23. Doesn't necessarily mean we need to get down there to have before we have a massive rally, but we do need to pull back into the 20s before I would feel comfortable at my time frame in life with putting capital to work for the longer term. If you're in your 20s, early 30s, you dollar cost averaging in. Don't worry about it. Just keep doing what you're doing. Consult your financial advisor. Now, over the weekend, this is what I saw all over Twitter. And right now, this is looking kind of like it may work out this way. The Black Monday. So the Black Monday actually began the Thursday before. The markets were down the Thursday, Friday, pretty ugly stuff, very consistent with what we saw last Thursday, this Friday. And the floodgates of hell opened up, huge gap down, which we're going to see unless we get some sort of intervention overnight. Hell, we can even get an emergency Fed rate cut overnight. A big gap down that Monday. Oh, this is 1929. Sorry, 1929 crash. So there was there's another one out there, Black Monday. It looks the same thing. But you saw these all over the interweb over the weekend. But me being contrarian, I look at these and I see all the doom and gloom on Twitter, and I just say, God damn, this is beautiful. This is glorious. This is a great opportunity. So when you see this stuff, take it with a grain of salt. Now, I mentioned earlier that this sell-off, or the reason why President Trump is so happy right now, it has nothing to do with tariffs. It has everything to do with debt. Now, Stan Druckenmiller happens to get it. He doesn't say it exactly the way I would, but tip of my cap to Stan Druckenmiller. He's a great investor. So let's have a listen. I want to make sure I am sharing my audio. I want you to listen. It's very brief to Stan Druckenmiller because what he says matters. And it's very relevant to what we are seeing right now I want to make sure I'm sharing my audio. I am now. I was not. Good. So let's hear what Stan has to say. Let's hear what Stan has to say.
Yeah, I don't want to exit this interview as tariff man. In a perfect world, I would not be for a 10% tariff, but we're not in a perfect world. As you know, we have a big fiscal problem, mandatory spending, plus interest expenses, literally 100% of revenues right now. And both sides of the aisle have said they are not about to cut entitlements, which is the elephant in the room. Having said that, because of that, we need pay-fors. So our main choices are an income tax and a consumption tax like tariff. So when I say tariffs are the lesser of the two evils in terms of those two, because we have a fiscal problem, we need revenues. Tariffs will generate revenues. We also have a private savings problem in this country. They're far too low. So I think a lot of economists who are out raising the alarm bells about tariffs would probably be fine with a consumption tax. To me, tariffs are simply a consumption tax that foreigners pay for some of it. Now, the risk is retaliation, but as long as we stay in the 10% range, and I think so-called fear of Donald Trump, I think the risks are overblown relative to the rewards. The rewards are on high. It's more like they're the lesser of two evils.
Okay, so Stan frames it. So what are tariffs? Tariffs are a consumption tax on Americans. However, they're partially subsidized by foreign governments. You know, whether they absorb some of the costs being put upon the American consumer, that's their business decision. So The big concern are the retaliations, and that's what's causing the market volatility right now. It's not the tariffs, it's the retaliation. But we had to do this because we've had a series of presidents. And if you want to talk about Democrat, Republican, I would hope that we're beyond this Democrat, Republican thing by now, because they have all sold every single one of us down the river, from the Bushes to the Obamas to the Bidens. They have all sold this country down the river, whether it be with NAFTA, the Paris Accords, whatever trade agreement they have gotten us into over the past few decades has caused, as Ross Perot would say, a giant sucking sound of jobs out of this country. And President Trump was right the other day. It is a national crisis. Our manufacturing base is being, or has been, decimated. What if we go to war? What if we go to war? We don't produce enough stuff here. Our manufacturing capacity is insufficient. Our pharmaceuticals are made in the country that will probably be going to war with. Our semiconductors, by and large, they're designed here, but they're built over in, or manufactured over in Taiwan, only a stone's throw away from the country we are going to war with. It's only a matter of time. This had to happen. So, the reason why this is happening right now, why Donald Trump is doing the jig, is because the United States, I queried this into ChatGPT. I wanted to find out how much debt we had to refinance in 2025. I was given a range, and it spit out a range as well, $7.6 to $9.2 trillion refinanced this year. Our current interest on all of our debt is at around 3.337%. And that's at $36 trillion. If we have to refinance, let's go with the midpoint, let's say $8.5 trillion. If we have to refinance $8.5 trillion at rates that are measurably below 3.337%, our debt payments skyrocket. So I queried, how much would they skyrocket? At the low end, $76 billion per year. On the high end, $92 billion per year. This all had to happen. The reason is that yields were going up higher. If we had to refinance over $7.5 trillion in debt in 2025, we would be doing it at nearly 5% on the 10-year. Think about it. Our average cost is 3.337% at current. You refinance debt at nearly 5%, that number grows exponentially. Our dollar, if you think it was weak now, would get even weaker because we're already bankrupt. We're just more bankrupt. So what he's doing here, and what I believe is the game plan, is that I was listening to Jay Powell the other day, and whatever love fest he was on, I was just listening to it, and he was just giving these softball questions. He was very hawkish, very matter of fact, very nonchalant, very, very. He was too confident, and I think the purpose of his confidence was to not reassure the markets. It was to unhinge the markets. What did we get by him and the president unhinging the markets last week? Let's take a look at the 10-year yield. Here's the weekly chart of the 10-year yield. We were going up in December, nearly at a 5 handle. Remember, over $7 trillion, nearly $9 trillion worth of debt had to be refinanced up here. By refinancing down here, we save an incredible amount of money on interest payments over the course of every year until they need to until they need to get refinanced. So I also asked, when will the majority of refinancing be completed by? In 2025, the U.S. government faces a task. We already know this. Yeah, we'll just get to the answer. The majority of the refinancing activities are expected to be undertaken and completed by mid-2025. I think we're setting up for once that refinancing is over, that you're looking at a Federal Reserve that is far more accommodative, a president, if they're not accommodative, a president that will jawbone the heck out of Jay Powell. And why would he do that in his first year of office when he's got plenty of time before he has to go for re-election? The reason is midterms. How many days until the midterm congressional campaigns begin? Long story short, they've already begun in a way. You've had people positioning for spots in the congressional districts. The action's already beginning to gel. It's already beginning to take place. They're just not campaigning yet. This time next year, all you're going to hear about are the midterm elections. This needs to be in the rearview mirror by this time next year. Everything he's doing is deliberate. It has to happen now. Reagan did this in his first year of his presidency. He supported Paul Volcker to kill inflation, and we went into recession. By the time that he lost I believe he lost Congress. He never had full Congress. I think he lost either the House or the Senate during that midterm, but he was still reelected for a second term. This is 4-degree chess. It has nothing to do with tariffs. They'll negotiate trade deals soon thereafter. Right now, they want yields low, and that's all they care about. They care about the refinancing. Now, arguments for why that we're going to see a rally, and I'm saying this with the equity markets down at current. My alerts haven't fired off here. NQ is down nearly 5%. I'm saying we're going to rally. Okay? Sometime this week, we are going to rally. The severity of that market will have everything to do with the catalyst that causes that rally. If it's a technical rally, meaning we hit technical support, the buy programs kick in, that could be good for a 3-4% move. If it's a Fed intervention type rally, then you're looking probably at a bigger move, depending upon how much confidence that the markets put into what the Federal Reserve is saying. Now, remember, back in 2020, the Federal Reserve cut by a half basis point overnight. The markets rallied and sold off right away. Right? I don't think we're in that type of environment. I simply don't. So, yeah, is this bad price action? No doubt about it. Are we at historical support? Close. No cigar yet. I'm not a buyer here. Now, arguments for a rally. What you're seeing on the VIX 1 month versus 3 month is what you call backwardation. So basically, there's a lot of fear, a tremendous amount of fear pent up in the short-term contracts. People are spending a tremendous amount of money to buy those short-term April, May contracts on the VIX futures, and they're driving up those futures. The problem is those futures are more expensive than the later dated contracts. That's backwardation. So what that's telling you is that when you've seen this in the past, like in 2020, 2018, that was a taper tantrum. 2020, we all know what that was all about. 2008, what that means is that it's a sign of a short-term top, if not the top, in the sell-off. or the top in the VIX, the bottom in the market. So keep this in mind. This to me is a bullish indicator. People are putting it out there as if it's a bearish indicator. It's not. It's bullish. It all depends upon your mindset. Are you prepared for this sell-off? You should be, especially if you've been watching this for as long as I've been doing this and warning about this. We now have 200 people on, folks. I see we have 200 people on. Folks, if you're just joining in, get my infographic about where the main technical support levels are on the triple Qs. Head on over. It's free. I created it. Just take advantage of it, print it out, have it on the sideline, understand where your support levels are. If you're going to buy this dip and you do not know when your support levels are, you're hoping when you should fear. Please make sure you're buying at support levels. Head on over, link below on YouTube, link above on my Twitter link tree. Other reasons why we are bullish. Take a look at, this is from Sven Henrik. He's a contrarian like me. How intense was the week selling in the markets? One measure for perspective, NASDAQ new highs versus new lows closed this week at negative 1,445, the lowest weekly close since the financial crisis. Is this bullish or is it bearish? You got to say that it's bullish. Maybe not tomorrow, maybe not Tuesday, but very, very soon, you're going to be looking back on this YouTube and saying, Jesus Christ, you're gonna be, that freaking guy was right. That guy with the crazy hat, the glasses on the YouTube channel on Sunday night sitting in his basement was absolutely right. The markets are having a rip your face off rally. Join us. Take advantage of our 14-day free trial offer. We'll be going over the markets every single night and the support levels on that infographic I put together with members. 14-day free trial offer. Use the link below. Get TrendSpider for free with our silver and gold level memberships. This is bullish, the lowest level since 2008, the financial crisis. Hedge funds dumped global stocks at the fastest pace on record last week. Institutional sellers sold most stock in at least the last 15 years on Thursday, according to Goldman Sachs. Over 75% of selling was U.S. stock. The S&P 500 fell 17.4% and is on the verge of a bear market. Everybody wants to use that 20% bear market. We're in a bear market. We're in a bear market. So I'm not going to wait for 20% for somebody to tap me on the shoulder and say, hey, you may want to sell your stocks. I think we're in a bear market because CNBC just said it's 20%. Therefore, we're in a bear market. No, we put it in a double top. We broke down to lower lows. We traded down below the 50-day and the 200-day moving averages. Guess what? And on the best case, we're in a correction. Worst case, we're in a bear market. So this is sent over from TrendSpider. Great chart. Rising lower band. This has got to be a monthly chart, I believe, unless you pull back to a very long weekly chart. And we are probably going to open up right into this rising lower band of support, which we hit back in 2023, 2022 bear market, and COVID. Now, other reasons to be a bit optimistic here. Vietnam, Taiwan capitulate, offer to remove all U.S. tariffs, boost investment. Folks, the big 300-pound gorilla or gorillas in the room are first China. China is in a deflationary spiral. The last thing they need right now is a trade war. They, more than anybody else, want a deal. The Eurozone, they have their own mix of problems. They have big tariffs on us. They always have. The Koreans have big tariffs on us. They always have. I think they sell, the Koreans sell like 500,000 cars into the United States every couple of years. We sell about 5,000 cars there. There's a trade imbalance. So it's all got to right itself. Let's get back to our chart request. Let me go to comments here as well. Jody, welcome. The lovely Jody. Pretty sure the tone would be different under Biden, but this didn't happen under Biden, of course. What didn't happen under Biden? Let's not put blame. let's not put blame. We need to really, if we're going to be in this business, we can't think short term. The Chinese laugh at us because we have elections every 4 years. The max we can have a president is 8 years. They have plans that go out 100 years. They laugh at us. Not that they're any better than us, but they laugh at us. So if you're going to blame Trump for what's happening right now, why is the severity of the sell-off so great? Why? It's because our manufacturing base was sold out 30 years ago, 40 years ago. I remember back in the 80s when I was a kid hearing about we're a services economy. At least back in the 1970s, as dire that decade was, we manufactured stuff. Even in the 80s, we manufactured stuff. Then NAFTA hit, and then we let China into the World Trade Organization, and then you had the giant sucking sounds of jobs out of this country. So let's not blame Trump. Let's not even blame Biden. A pox on all of their houses. Trump is here to fix it, whether he's right, whether he's wrong. Either way, it had to be done. Thanks for breaking out the no, thanks for giving it to me. Bob, sees through all the smoke and political shenanigans. No one has been looking out for the U.S. working man. That's very, very true. All these Congress people, they are millionaires. Why? Why? All of them want war over in Middle East and in Europe. Why? Because they're banking. Just watching oil this week. Yeah, oil's going to bottom soon. I mean, that's ridiculous where it's at right now. Let's check in with oil, as a matter of fact. Looks like we have a little bit of stability here on the NASDAQ. I'm sure the E-minis look the same way. Let's bring up oil. Oil down 3.31%. I like to set these alerts up. It gives me I don't like staring at the charts all the time. So it gives me an opportunity to feel the pulse of the markets by way of, it's just in my head. I could just visualize through the alerts how the market's performing. So right now, we're in a situation right now. You could bet that Wall Street's loaded up with banksters, and they probably have the Federal Reserve on their speakerphone, Zoom meetings going on right here, right now, planning on what the next move is. So they're coordinating. Guaranteed the central banksters are they're in meetings right now as well. Guaranteed. Natural gas now down to about 3.5%. Falcon. Big Bob. Yeah, if I get any bigger right now. I haven't been in the gym for like the past week. Long time. Looks like church is insane. Yeah. Yeah. So a lot of good buys here. Russell 2000. It looks like we may be rolling over here yet again. Oop, I clicked the wrong one. I want to know if we break out to higher highs. Now, the mid caps and the small caps, I think that once we do bottom out, there are three areas that I like. Mid caps, small caps, and international stocks, emerging market stocks. The reason is, if you believe that the dollar is going to proceed lower, as I do, then That's a tax cut for emerging markets. Plus, the mid caps and small cap stocks, especially these profitable small cap stocks, they're relatively cheap. So this is a great opportunity to buy those stocks. Now, the large cap, especially the Mag 7 names, while their PE multiples have come in, they're still frothy. Even with this pullback right now, they're still going to be frothy. You're not going to see Warren Buffett out there opening up his checkbook tomorrow morning. Guarantee you that. Let's wrap up our chart requests, and then we will come back here as things unfold to check back in with the equity markets before we log off. So we left off earlier with Trinity. We completed that. Let's head on over to SoundHound. And I want to show you one stock last week that did very, very well. And that's indicative of where this economy may be going. So SoundHound, back down below 7. Oh, back down below 8, I should say. I did a video on analysis of SoundHound back here, rode this rally up, not to the peak, not up here, but around here. So SoundHound, let's go to the weekly chart first. Nearing very, very good support. You see a 6 handle on SoundHound, which you probably get tomorrow morning if the markets open up as is. I think it's a buy. I think it's a buy. But please, when I say buy, nibble. We don't know what tomorrow may bring. As a matter of fact, I did a live stream on Thursday night. I believe the name of the live stream I put on it was Today's Lows Could Be Tomorrow's Highs. Now, Thursday was an ugly day. What do we do on Friday? We gap lower. So today's lows could be tomorrow's highs. Don't get too aggressive. Just when you think we can't go lower, guess what? We go lower. Understand where your historical support levels are and watch the volume. If volume continues to grind up higher to the downside, that's institutional distribution. You do not want to fight those guys. They're putting programs into a computer and they're selling when appropriate, and they're ruthless. There's no emotion involved there. They're getting out. Don't fight them. They'll roll you over. The good part about that is that the selling gets so overdone, it's inefficient. It's just so severe that the pendulum is swung from being overbought to now being extremely oversold. There's your opportunity to buy that bounce. You just got to identify it, and that's what we're going to be looking for. So SoundHound is looking interesting here. I sold it up here. Would I buy it back at half the price? Yeah, I would. But I would leg into the trade. I want to make sure what I'm not seeing is a bull trap set up. Once the stock begins to trade back above its 20-day, back above its 50-day, and then the 50-day starts hooking up above the 200-day, then we know, okay, our markets are looking normalized again. Then we could start pressing that long bet. Right now, all you're doing is buying for a trade. That's it. Let's take a look at Bros, B-R-O-S, for Talon, weekly chart. We have our downtrend. Do we have any support levels down below? Yes, we do. We bounced off. This is the algorithm on TrendSpider, folks. If you're not currently using this automated trend line, it's a time saver. I love drawing my own trend lines, but I also love clicking a button and having it done for me. So last week, link below, get 35% discount on TrendSpider below, link above on Twitter, bare minimum 35%, probably even more. We bounced off of historical support last week on Bros, Dutch Brothers. Let's go to the daily chart. That support level coincided with the Fibonacci retracement level. I don't know which one. Not much support on a daily time frame. I don't know why this I got to let them know there's an error here. Usually I'm able to overlay the weekly charts on top of the daily charts, but I got to let them know they got a problem here. This has been going on for like a week now. All right, so clearly Bros is in a downtrend. We know we have weekly support below. That's where we bounced. We closed down below critical support at 51.25. I think we need to come back down here to at least 47, 47.50 thereabouts. You know what? Even down here, I like this better. 45.70 on Bros for nibble. I think that's entirely possible. For a bloodbath, 37.97. And it's achievable. It doesn't seem achievable right now, but who would think that right now, after a 2-day massive sell-off last week, that you have a 5% down market on a Sunday night? Tonight's show was like a stress-relieving yoga class. Thank you, Larry. Hey, Tim, you're very, very welcome. TZ Burton, hey, welcome, brother. I'm going to show you a thank you very much, Talon. Appreciate that. Thank you, sir. Always a pleasure. Let's check in with this other company that did very well last week, folks. We want to be optimistic, right? I've been coming on here in a bull market saying, beware. It's going to end. It's going to end badly. Now we want to start to flip the switch because now when everybody is bearish, as a contrarian, now I want to look for opportunity. We knew it was coming. It's happening now. Now what are we going to do about it? Are we going to let the opportunity get away from us? Absolutely not. Maybe we'll be too early. But will we be wrong in the long term? I highly doubt it. We have a hypothesis. That hypothesis is the reason why they're doing this right now is intentional. It is coordinated between the Federal Reserve and the White House. Why? They need to refinance over $7 trillion worth of debt this year. We were just nearly in December at 5% on the 10-year yield. Our average cost on our debt is 3.33% right now. Having refinanced that debt up there at those interest rates would have taken that average much higher. We can't afford it because the way we pay back the debt on our interest is that we borrow the money. This had to happen. The beautiful part is that the refinancing will be done mid this year, June, July this year. That gives the president plenty of time to make sure that Fed Chair Powell's mind is right and that yields are coming down lower. That way, they can take the stock market up higher, the economy up higher, while inflation is hopefully left in the dust. And then the midterms, they're ready for the midterms, so that way the Republicans do not lose the House and the Senate. God forbid they do that, or else you're going to have a lame duck president. So, closing it out here, I want to leave it on a high note. Rocket Mortgage, I've owned this company in the past. This is probably my favorite stock right now, RKT. While the rest of the market was down last week, this stock was up 25%. Why? The reason is yields are coming down lower. What does Rocket Mortgage do? Or Rocket Companies? They issue mortgages. So their business is going to look real good. So Rocket Mortgage, bullish. I'm a buyer, to be frank with you right now. I think that it's going to go up. The only thing you got to hope for with this company is that you don't get mass layoffs. And the jobs data was good on Friday. That's why I think that this stock did so well. Yields coming down, jobs looking good. Bob, you're the crazy man in the basement. Good job. All right. Thanks, Sean. I'm the crazy man in the basement. I got to have a t-shirt made up about that. All right, guys, let's check back in with the rest of the markets. We'll close things out here. And things have quieted down, but we're still looking at a weak market. We have the Russell 2000 small caps down 5.41%. The S&P 500 down 4.5%. Are they? Let's get off of this 5-minute chart stuff. I'm not a day trader. Let's go to a 15-minute chart. Yeah, this is going to break lower. This is going to break lower. So, folks, you know, in saying this, I want to be optimistic tonight because I know there's a lot of bearishness out there, but I am not going to say that I don't want hopium. This is still a very dangerous market. If you're going to buy this dip, please know your stop, know your support levels. If you're going to buy, you got to do it at a support level. You have to do it at a support level because that way you have buyers of like mind to help you out. You may not know them, but they're out there. EMD, mid caps, down 4.85%. You got support right down here on the EMD futures at around 2507. I think that's where we're going. Let's bring up the NQ. I think that this is where we're going to find our bounce. I think they need to take this lower tomorrow. Sounds incredible. But on the NQ, I think we're coming down to 1612.28. In closing, folks, if you're not familiar with where the support levels are on the triple Q, head on over. I created this infographic yesterday, and as all of this is what it looks like, but it's a 2-pager. I have all of the support levels on the triple Qs and why each support level is significant. So it's free. Head on over. If you're watching this on YouTube, use the link below, above on Twitter on the link tree, and it's free. Download it. Use it at your own leisure. And Pete, we'll go over Nike. I want to delay this a little bit, logging off. I'm waiting to see whether or not we get a break. We'll leave it off with Nike. A break to new lower lows. Nike, absolute and utter train wreck. But I think we're very, very close to a bottom here. So what we have here going on Nike, this is a monthly chart. Now, granted, it's very early in the month, so take this with a grain of salt. You have prices, obviously, I'm telling you what you already know, pressing lower. We have now broken down below the lower band of this declining wedge formation. But I want you to take note of something. We have a bullish divergence on the stochastics. Now, this could take months to play out. I'm not saying go in on Monday morning and buy the stock. This is a monthly chart. It's early in the month. A lot can happen. So this is just food for thought of what may be going on here. Now, daily chart, good day on Friday, closed up in a down market. Stokes are very oversold. Would I buy the stock here? Probably not. I would sell deep out of the money puts, probably with a corresponding sale of calls, an iron condor or a strangle. If you're going to do a strangle, that's a naked position. You may want to just keep that very small in this market environment. So I think that we're at a tradable bottom on Nike. So it's looking interesting. And with that, folks, thanks for being here. Don't forget, like, subscribe. You know the deal. Don't forget about the infographic, link below on YouTube, link above on Twitter. And don't forget, take advantage of our bare minimum 35% discount on TrendSpider. Link below on YouTube, link above on Twitter. And in closing here, we kept this optimistic tonight for a reason. There's reason to be optimistic. A lot of damage has been done to this market, but unlike 2020 COVID, we didn't know what the outcome was. Unlike the financial crisis, we didn't know what the outcome was. With this, we kind of know what the outcome is because we know it's not just about tariffs. It's 4-degree chess. We need to do what we're doing right now to refinance our debt at lower yields. You're seeing right now the 10-year Treasury yield dropping like a rock as I speak. That's what the government wants. Treasury is going to be out there holding auctions. They're going to take those old bonds, refinance them with new bond yields. They may be paying a little bit more, but nowhere near what they would have been paying a month, 2 months ago. So this is all deliberate. It is all on purpose. It's early in his presidency. That way, he cleans house now. We see an economic recovery, a stock market recovery by the midterms. He keeps the House, keeps the Senate, sets the stage for J.D. Vance or whoever he taps on the shoulder as being his chosen successor to be the next president. This is all 4-degree chess, folks. Have no doubt about it. Have a great night. I'll talk to you soon.